Webbot did warn us. Housing crash 2.0 would be on the horizon in the not so distant future, which I've been keeping you up to date with incredibly well, I might add, because I'm following it like a freaking hawk. And I've already done a few videos showing examples of this one's down, that one's down, that one's down, these numbers are down, etc. Ownership's down. Last month, purchase of house, that's down, etc. And now I've got two separate articles from major sources, mind you, especially one of them being, remember Freddie Mac, Fannie Mae? The one the government had to bail out and kind of sort of take over, those guys? I'm going to start with that one first. And then Dave Kranzler from Kranzler Research, which is investmentresearchdynamics.com. I'm sure you've heard of his name before. He's talked about gold and silver, etc. But he's got a really good article about this. But so does Zero Hedge about Freddie Mac. So we're going to talk about that one first. Freddie Mac issues warning as mortgage rates soar. And I realize I haven't done a video yet about the interest rates. The Fed has upped the interest rate. The Fed, another 0.25%. So a year ago, 0.25%. Markets didn't like it very well. The markets did not like that very well. This time, the markets are loving it. Gold and silver, as of today, and a little bit yesterday, hit quite hard, pushed the price down again. And I'm sitting here telling myself, do I buy some silver right now or do I wait? Because I could follow some advice that I've given out numerous times. If you have all the gold and silver you wanted, set your goal. You met your goal. Prices are still low. I might want some more. Do I wait for market to potentially go down more to get an even more fantastic deal? Or do I just go to hell with it, but just keep buying some more? Both are okay. But if you've really met your goal, maybe you set another goal, which I did, and then I set another goal, which I did, maybe I'll just wait to see how far down can JP Morgan take this puppy. Can we see another $9, $10 silver? Can we see another day like that? I only need one day. I only need one day. Because I can easily go right online. Doot. How much do I want to buy? Place the order. I won. Give me my silver. Etc. And I do have a video to talk about that. Ted Butler, another guy you've probably heard of. 24-hour gold or 24hgold.com. He has a really interesting thing to say about it. That's going to be my final video, actually. I need a separate video just for that one alone. And I read normally I read a little bit of it, and then I realized I'm going to do a video about it. I read the whole thing and said, man, this guy, I feel like I'm thinking the same way, obviously, And I'm like, yeah, I need to go ahead and do a video on this one because he brings out a lot of good points, and it kind of goes in line with the video I just did where I said for just a couple days ago, I think the video title was something like, for all of you that, matter of fact, let me just find it. So I had to do about, being upset about the price of silver or whatever. I'll tell you the title. Let's see. For those who have lost faith in precious metals. It's got 11,077 views currently. It caught some people's attention. And I explained in there, we never anticipated, this wasn't like an investment to make some money. This was saving our livelihood and waiting for the right moment to then cash out. And that moment's going to be phenomenal. This kind of goes in line with that, with what Ted Butler's saying, but he has a different type of, like an analogy that's fantastic. Not this video, the next one. So, Freddie Mac issues warning as mortgage rates soar. I told you they would be raising their rates. And as I said, the Federal Reserve has raised their rates. Even Mexico, their central bank, raised their rates and their dollar went up. Just like, oh my God, our dollar went up. Record breaking. No, we haven't had dollar highs since the U.S. dollar has been this high since 13 years ago, whatever the hell it was. And you know what happened after the dollar hit all-time highs? See history note, 2008, 2009. Okay? Blink and you missed your chance to refi. And according to nationalized mortgage giant Freddie Mac, it's about to get worse? No. Freddie, you've been reading them Webbot reports. How about Mac? Maybe how they have law firms, Bozo and Schmo. Is that what Freddie Mac and Freddie and Mac and cheese? I mean, what is this? As shown last week, as a result of the recent spike in yields, the population of eligible refinance candidates has already plunged by more than half. As Black Knight pointed out, as of the end of November, though there are still 2 million borrowers who could save $200 a month by refinancing and a cumulative $1 billion a month in potential savings, this is still less than half of the $2.1 billion per month available just 4 weeks ago. So hold on, right? Let's think about this. There's now a cumulative $1 billion per month in potential savings. This is less than half of the $2.1 billion available just 4 weeks ago, which implies what? That little teensy-weensy interest rate hike in mortgages, which didn't have anything to do with the Federal Reserve raising their rates, because this happened before that. I'm talking not last year's Federal Reserve rates, but, a day ago, 2 days ago, whatever. Before that, the rates were already rising. Why are the mortgage rates rising? Well, Federal Reserve hasn't even spoken yet. So that move alone caused this little issue. And if you want to see this chart, and you might, let me move this out of the way for you and take a look. Everything was looking good over here. I mean, come on, man. June, July, August, September, October, man, come on. Even before that, April, May, June, the whole year. The whole year looks great. Look at this. And then all of a sudden, what's happening? Little interest rate rise. We were at 3-point-something%. Now all of a sudden 4.25 or whatever it may be. Right this second. Since then, the number has shrunk substantially as rates have continued their relentless move higher. According to the latest Wells Fargo refi rates, a 30-year fixed mortgage will now cost a prospective creditor some 4.625%. This was in the mid 3% range just a few months ago. And what did your best pal Jason Epford tell you happens when you have a person, you, and me, everybody, in other words, we have the same job potentially. I mean, most of us do, right? We work 40 hours, whatever it is. In other words, your average paycheck every week, every month, you know what it is, roughly speaking. Which also means I know that I can afford this rent, or I can afford this, in this case, mortgage payment for a house. And let's just say that number is $1,500 a month. I have my car, got a car payment, whatever you have, you do or don't have. All you know is $1,500 is my limit. And the rates just went up practically a full percentage point. Now all of a sudden, and it all depends on how much your house is, because a $200,000 house monthly payments versus a $300,000 house monthly payments, you take 1% on each of those, and it doesn't go up the same. So if one now has to pay $1,650 a month for the $200,000 house, I'm just making this up, I'm not doing the math, then the guy with the $300,000 house might be paying $250 more, $300 more. There's no, I don't know the math right now because I'm not doing it, but it's just 1 percentage point. Not a huge jump, but enough to say you're no longer qualified. I'm sorry, you're not qualified for this mortgage. You a month. But hold on, a month ago, you guys said I was pre-approved for such and such fee. Hang on a second. Got a cat trying to steal some chicken off the table. Cat said, "Oh, the cat was like, oh, he's over there doing his videos for the night. Pfft. Got some chicken on the table. It's leftovers. It's, stuff that's about to be thrown away. A little bit of chicken scraps on my kid's plate. Oh, he's up doing videos. Pfft, that bozo ain't even gonna look over here. I'm gonna tear this up. I see her. I stop the video. She's already licking her lips like, I'm already done. Sure, I'll get down. Don't sweat it. Get back to your video. All right. Thanks, kitty. So anyways, a single point in interest can be devastating to someone because, again, the other numbers I share with you, almost nobody is saving right now. Those who do or think they have something saved up in their bank have $1,000 or less. And anyone who needed to come up with $5,000 like an emergency, the number was astronomically insane. Like almost nobody can come up with it. So how do you afford this new house? Last month I was approved. Yeah, but that was last month. The same house, same price, by the way. Your mortgage is now going to be $1,650. Matter of fact, I really want to be accurate. Let me pause this and go get my little mortgage calculator thing so I can tell you precisely what the difference in monthly payment is. Okay, here we go. Just want to be accurate. Because I want to be like way off when I'm doing a little analogy or whatever the hell I'm doing. $300,000 mortgage, 3.5% interest rate. I'm just going to do a full percentage point on this. 3.5% interest rate, and this doesn't include the little PMI and this. And then, are you escrowing the property tax? Nope. This is just the mortgage payment. Okay. $300,000 house, 3.5% interest. $1,347 a month payment. That sounds damn good, doesn't it? Man, I can own a $300K house. Again, it doesn't include the PMI, doesn't include property, etc. Escrow. So let's just add $1,347 a month. Add 1%. Goes to $1,520. Boom. So $1,350, $1,450. $1,550 would be $200 minus $30. Your payment just went up $170. Nothing happened. You waited a month to close on the house or lock it in, so to speak. You didn't know. You didn't know the rates were going to rise a percentage point. Come on. They've been low for so long. I'm sorry, sir, you can't afford the house now. Well, what can I afford? Let's go take a look. How about $280,000? No, not enough. $1,419 is not enough. $260. Now we're close. $265. We are just about there. $266. Yes. I'm sorry you can't afford a $300,000 house now. You can only afford a $266,000 house. Payment $1,347. $48. $1 more. Just literally a month went by. And that's the difference. How does it make you feel if this was you right now who just went through this? Damn it, we couldn't close last month. Now we got to close this month. And you're finding out that 66, we'll call it 65, 75, 85, 95, $35,000. Poof, gone. You're giving it to the bank. You're giving it to the club. You just gave $35,000 to the club. Difference because of the difference, right? The difference in interest. Not only that, they're making 4.5% interest on that 30-year note. So by the time you pay that turd off, man, do the bankers love you. There's a problem though. They're trying to squeeze blood from a turnip of available people with actual credit who can afford a house. And that's where they're going to have a problem. Because as these rates rise, the mortgage rates, and they're going to rise, they have to, because we need rates, generally speaking, to rise so that the pensioners and the savers don't get slaughtered as long as they have been, and that can reverse. which means that $300,000 house, as I've said, I've done enough videos now about this. You're going to be left with a $300,000 house that's now worth $200,000. You're going to lose a third of the value easily just by them screwing with the interest rates. That $300,000 house at 6.5% is almost $1,900 a month. $1,347, 3.5%. $1,347 a month. Add 2 points, 3 points, which isn't a terrible interest. 6.5% interest rate. $1,996, and we know, by the way, there are quite a bit still of these adjustable rate mortgages out there. So when do those suckers come due? What's the rate going to be at for those guys? They're already in the house. It's not like they're going to go buy a new house. I'm already in the house, and my rates are going to rise. As in your monthly payment. So if by chance this happened to you, you're locked in, adjustable rate mortgage, 3.5%, played the game, $1,347, give me my house. Sorry, sir, adjustable rate mortgage. We know we told you when we sold you the loan, this would never happen. Rates were going to be low probably forever. But the Federal Reserve and the banking system, they've just, for whatever reason, decided rates are going up. And I already got my commission 3-4 years ago, so I'm done, be gone. But, listen, here's a new letter we're going to have to send you in the mail. Your $1,347, adjustable arm, 6.5%. You're going to have to start paying $1,900. 13, 14, 15, 16, 17, 18, plus 50, $550. Nothing changed. The house is the same. The neighborhood is the same. The air you're breathing is the same. But we need $550 more a month. Which means what? It's going directly to the banks. They've gambled on Wall Street. They've gambled everything away. They've been bailed out. They're sucking blood from a turnip. They can't. And it's time to go back to reality. Guys, we can no longer be investment banks like we were. The days are coming to an end. Let's start preparing for normal banking type things where we, do that old stupid thing of lending people money, not investing in the markets, and just doing that old thing. But we've hired a lot of people over the years because we've been in investment banks. Now we have to let them all go. Go back to reality, back to what we used to be, which means the rates have to rise so we can make some money. Because we can't make money this way anymore. The gravy train's over. Or soon coming to an end anyways. So that's all I want to discuss right now for this. 5-year Treasury indexed hybrid adjustable rate mortgage averaged 3.19% this week with an average of 0.4 points up from last week, which was 3.17. A year ago, the 5-year was 3.03. But more troubling was Freddie's explicit warning that, quote, if rates continue their trend upward, expect mortgage activity to be significantly subdued in 2017. Why? Because people won't be able to afford it. That's why. And the house prices, as I said, will happen. It's good. This is going to happen. Are coming down. Which means, right now, as I showed you the other day, we are at another all-time high. Like 2006, I showed you the little line in the chart. We are at all-time high housing prices. The party is ending. So anybody who I've talked to, even at work, friends, etc., I'm probably might think about selling our house next year. You need to sell it as soon as possible if you want to make this work. Go rent a place. Well, yeah, I don't want to do that yet. Just understand that you think you have equity now. The rates start rising, your equity goes away. Oh, we got $50,000 in equity. Again, $300,000 house, you owe $250,000. I could sell it for $3,000. We got $50,000 in equity. Oops, interest rates just rose. You have nothing, which also means what? For the last how many years have you owned your house? Oh, 7, 8. all that's gone. All that money was thrown away because you just broke even selling it today because you have to sell for $250 now instead of $300 that you thought was worth just a few months ago, let's say in this example. That's gone. Have a nice day. And then what happens? A whole bunch of J-step 4 maneuvers take place by people who used to think, I'm doing the right thing. I can't walk from my house. Nope. We've been screwed twice now. I'm walking from my house. I've had enough. And I will give them a little clap on the way out. Good for you. No, a good lawyer in Florida, if you need one, he'll protect you for a one-time fee. He'll fight your foreclosure. And since you're going to walk, you're going to fight the foreclosure because it screws your record over anyways. And if you could live there for 2, 3, 4 years, not making a payment, you could pile up a bunch of money in a hurry, pocket it, have a little nest egg, and if rates go up too high and things get too crazy, I'm just saying, I don't know if you could save up that much money in 3 or 4 years, but you might. That payment that you normally send out, because even if the property taxes, all that stuff's escrowed, you're not paying any of it. The bank's going to have to pay it. Or the county will put a lien on it, which essentially goes against the bank, and the bank's going to pay that lien so they don't sell it up from under them. So you get to stick it to the bank again, should you do something like that. And now, Kranzler Research. Adios to the housing market. Dave Kranzler. That popping sound you hear is the Fed popping the housing bubble. The housing bubble that it inflated with 0% interest rates and zero-bound credit requirements to qualify for a mortgage. But first, let's get this out of the way. Goldman's Jan Hatzius, apparently the firm's chief clown, he scratched out the word clown. And so I had to, you may not know this, but I just paused the video. I'm hearing noise in the kitchen, ice rattling, clinking. What the hell's going on here? Look up. All 3 of the kids are down here. Got to pause the video because I know this microphone is going to pick it up. Guys, what is going on? You know when Daddy does his videos, I choose to do them at your bedtime so that I have my own little time, peace and quiet, no noise, because this microphone picks up a lot of noise. Well, Mommy said I can come down and do the cat food. Yeah, Mommy said you could come down and do the cat food. Mommy didn't say all 3 of you can come down, fill your cups up with ice right in the middle of me, clink, 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 you know. So I said, Evelyn, one day, when we make it, I'm not going to have a man cave. I'm going to have a man shed. I'm going to have a man shed. Because then I'll be outside in my man shed with my little studio fake lighting nonsense, doing my videos. And then if you guys want to come down past your bedtime, that's on you, Mama. I'm outside doing my videos. So I thought it was kind of funny. I don't want a man cave. I just want a man shed. You know, little 8x12. That's all I need. Don't need anything fancy. I'll paint the whole damn thing green inside, so it'll be a giant green screen. Little air conditioner unit. Done. Happy as a pig in slop. One day, I'm telling you, one day it's going to happen. Moving on up to the east side. Maybe. Anyways, probably killing you right now with how much time this is taking. But let's first get this out of the way. Goldman, whatever, apparently the firm's chief clown, or he scratches out, economist, commented that the Fed's faster pace of rate hikes reflects an economy close to full employment. That statement is hands down the IRD's winner of retarded comment of the year by Wall Street. I guess if an economic system in which 38% of the people working age population is not working can be defined as full employment, then monkeys are about to crawl out of Janet Yellen's rear end. I guess we've witnessed more stunning events this year. Before we start assuming the Fed will raise rates 3 times in 2017 like they said they plan to do, let's consider that Bernanke's taper speech was delivered on May 2013. 3.5 years later, the Fed funds rate has been nudged up by a whopping 50 basis points, a little old 0.5%. In other words, don't count on it. Although, when it's time to crash the system, they need the rates to rise. Maybe the Fed will make good on that promise. We're going to raise it 3 times next year. We're actually going to do it because we need to cause the carnage. You know what I mean? So, He says even just marginally higher mortgage rates will choke off the ability of most buyers to qualify for anything less than a conventional mortgage with 20% down and a 720 credit score or better. With a rapidly shrinking full-time workforce, the Labor Department reported that last month the economy lost 100,000 full-time jobs. The percentage of the population that has a 720 credit rating and can afford 20% down is dwindling rapidly. The Dow Jones Home Construction Index is down 2.5% today, which, when did he write this? The 14th of December. What will happen to the stocks in that index when the Fed cranks back up its "we're raising again" song and dance? Despite the rampant move in the Dow SPX since the election equals while the Dow and SPX were hitting all-time highs almost daily, the momentum was not enough to propel the home builder stocks even remotely close to a 52-week high. Hell, the 50-day moving average has remained well below the 200-day moving average and has not even turned up. That is the market sending a message. So, there's more to this article as well, but I've talked enough. You got the point. I'm just keeping you informed. Housing market. Again, if you're on the fence right now, should we sell? We really were going to sell, but we're thinking about doing it next year. Like I said about the pensions, if they come to you with an offer, do you take that damn 50% cut and take the damn lump sum in full and get the hell out of there as fast as possible? If you want to do that for your house right now, I would say the same thing. We're thinking about selling. If you're thinking about selling, you better run. As in the very second tomorrow morning, as you're listening to this video, honey, let's call the realtor right away. And you know that price we thought our house was worth? Let's make it a little bit sweeter of a deal for someone before the rates rise even more. That might be the best decision you'll ever make in your life, depending on your situation, but for the most part, it might be one of the best decisions you can make. Get out of that damn house. Sell it as fast as possible. Go rent a freaking place like I'm doing. This was my plan. I told you this was my plan. And I'm going to sit back, do these damn videos while this carnage is happening around me, and then say, guys, I'm ready to go in and get a house. But what I'd really like to say, and it might happen, guys, I'm ready to get the house, and I don't even need a freaking mortgage. Sold off this, sold off silver, whatever. Save some money, whatever the hell it is. My other YouTube channel, which I'm about to get started, the stupid, what did I say I was going to call it? The press it in slow motion. I got the press. It's in a crate in the garage. It weighs like 650 pounds. I got to call a friend over. I got a bodybuilder friend, been lifting weights all his life, lives fairly close. Sean, need to call in the Cobra. Need some help lifting this thing, standing up. I'll put these little bottom pieces on while it's upright, and then you can go. Appreciate your help, buddy. If I can get 2 YouTube channels, my day job, I might, and then assuming the channel does well, I might be able to come out here and sing you that story. Guys, I just bought a house, selling some silver, and I made some money on YouTube, both channels, etc. Stocked it away for 4 or 5 years, and I'm now going to go buy a house with cash. Love to come out here and tell you that story. Take care.